Welcome back. We are almost an hour away from the opening bell for a Friday. Markets are down across the board. Take a look at futures. The Dow Industrials indicated to be down 320 points this morning. That's 0.2%. The Nasdaq is right now down 541. That is almost 2% lower on the Nasdaq. Chip stocks are selling off, and that is one of the issues behind the Nasdaq. Micron Technology, for example, down 3%. You've got AMD and VanEck Semiconductor ETF down 3 and 4%. Intel down better than 4% right now. Of course, these stocks are up huge in the last year. Taiwan Semiconductor declined yesterday after releasing its AI spending forecast, including an additional $100 billion to its U.S. build-out. The stock this morning is down another 3.5%, as you can see there. Joining me now is Unleash Prosperity co-founder and former Trump economic advisor, Steve Moore. Steve, good to see you. Thank you so much for being here. A real rotation underway for the stock market. Your thoughts?
Well, listen, I think there is a lot of anxiety in the NASDAQ in the technology sector. And, you know, yesterday I visited the largest data center in the country, maybe in the world, in Loudoun County, Virginia. I don't know if you've been out there, Maria, but but it's an amazing thing to see. It's an industrial marvel. You know, construction trucks coming in all the time, bustling with economic activity. I was so impressed with you know, this is a more than $1 billion investment. We cannot have our high-tech sector flourish the way it has, number one in the world, if we don't build these data centers. And I think there's a real concern. As you've reported, Maria, there's a real backlash on the left and the right, you know, from Bernie Sanders to some of the mega folks who say, look, we don't want data centers. But it makes no sense to me. I got to tell you, Maria, it would be like 100 years ago, Michigan saying, oh, we don't want a Ford plant here. They're going to use our water. They're going to use our energy. We need these facilities. And by the way, if one community or town doesn't want one, build it somewhere else, because we're going to need, you know, 3 times more data centers to lead the AI and internet revolution.
You know, I love the way the Democrats completely ignore the fact that the president has already taken care of the cost on this, telling the hyperscalers, if you're going to build a data center, the cost of electricity is on you. I mean, how long ago did the president say that?
Exactly.
Right? He did an executive order about it, and yet it just goes over everybody's heads. Oh, yeah, these data centers, we need a moratorium because it's costing too much money and it's spiking electricity costs. No, it's not. That's not what's doing it, because the president's already put that executive order in place. But, Steve, I want to get to your charts. You've got the best charts on Wall Street. The U.S. is facing massive migration out of high-tax states and into low-tax states like North and South Carolina, Arizona, Texas, Florida, all seeing the largest financial gains. Those states alone gaining billions of dollars in cumulative gross income between 2012 and 2023, while blue states, New York, California, Illinois, New Jersey, and Maryland, faced the steepest losses during the same time period. Walk us through these charts. What are they telling us?
It's the biggest story in America today. You can't understand what's happening economically and demographically without paying attention to this, folks. So basically, you're seeing a massive migration, maybe the biggest migration in American history, out of these big blue states. The 2 states that have lost the most people, sadly enough, are New York and California. Gee, they also have the highest tax rates, Maria. Do you think there might be a relationship there? More than 1.5 million people have left. And by the way, these are the net figures. That is the number of people who move out versus the number of people who move in. Think about California. This has never happened before in American history. California was always the state people wanted to move to, but because of these crazy left-wing, high-tax policies, they're leaving. And where are they going, Maria? They're going to Florida and Texas, and they're going. And you mentioned the Carolinas. Keep an eye on the Carolinas. Those are fast-growing states that are gaining population at a very rapid pace. Now, what does this mean for money? What does this mean for money? Look at the transition of money and the transfer of money that has left New York, California, New Jersey, my home state of Illinois. Where is all that money flowing to? It's flowing to Florida. Florida has gained over $500 billion, Maria, in income from these other. That's a gigantic number. That Texas is second. So what's going on here is it turns out people don't like paying high taxes. They don't like left-wing policies, and they are leaving in droves. And if New York and California don't get their act together, these trends will continue.
Yeah, I like these charts. You are the man with the charts. Hold on one second. We've got breaking economic data, the housing starts, building permits, import and export prices, crossing the tape. Cheryl Casoni's on it. Cheryl.
Love to get Steve's reaction to all of this. So let's get to import-export prices. Of course, this is the inflation story, and it's a leading indicator. We saw actually a gain of 0.3% for import prices. A gain. We were looking for a decline of 0.7% on import prices. That's a month-to-month read. Import prices year over year, 7.1% to the upside. So again, kind of hot numbers there if you're looking in the inflation story. Export prices down 0.6%. We were looking for a decline of 0.4%. So this could be a CPI, a PCE, leading indicator going forward. Anyway, real quick on starts and permits, Maria. Housing starts jumped 19%. Permits declined 0.3%. Still kind of a bifurcated housing market, Maria. But a little bit of a data dump. Back over to you.
All right, thank you. The Dow Industrials did take another leg down just now. The Dow is down 333. The NASDAQ is down 558. And Steve Moore, I want to get your reaction to all of this because we are also in the middle of earnings season. Let me just tell you, of the 45 companies that have already reported earnings, all have exceeded expectations with the exception of Costco, IBM, and Netflix today. The average surprise on the upside is 16%. Financials have been particularly strong prior to earnings season. The group was expected to have grown earnings 7.8%. In fact, they grew earnings between up to 18.3% from the banks on 21% surprises. One-time items at J.P. Morgan contributed to the results. Excluding those impacts, financials growth and surprise around 14.7%. These are great numbers on earnings, Steve. Your reaction to the backdrop?
Well, first of all, you're exactly right. We have the most productive and profitable companies in the world, bar none. And, and that includes China, by the way. China's market over the last 10 years has been only up 20%. Ours has been up 200%. So, yes. And by the way, one of the reasons for this, Maria, is the deployment of AI. The United States is leading the world in terms of using AI to reduce costs, increase productivity, and increase wages for American workers. Now, I am a little concerned, I have to say, about that import cost number, because if those numbers hold up, that will put pressure on CPI, and I think that's the reason you're seeing a negative reaction in the markets to this. We've got to get inflation back down to the 2% target, and the good news is we've got a guy at the Federal Reserve, and Kevin Warsh, who is completely dedicated to doing that. That's why I'm not worried about long-term inflation. This guy's an inflation hawk, Maria.
Yeah, but let's just talk about what we saw this week. Okay, this morning we get the June housing starts. They're up 19%, okay, versus an estimate of 11%. Housing starts are up 19%. Like, take a minute and get your head around that. That is a huge number. We saw the CPI, we saw the PPI come in much lower than expected this week, okay? So inflation obviously coming down. We saw retail sales at least moderately strong. It was in line with real GDP growth, staying in the neighborhood of about 2%. Solid demand here in terms of the macro story and solid change in terms of the inflation numbers. No wonder this market is up in the double digits in the second quarter. Your thoughts on where we are? Because to me, it looks like solid growth and falling prices is what the macro story looks to me. So when you building permits at 1.43 million versus an estimate of 1.31 million, come on.
Yeah. Look, we've been getting a steady drumbeat of good economic news, and that housing permit number is great news. I mean, look, we do have a housing shortage in America. It's a great thing when we're going to build. The question is how quickly can we get these houses built? Because young people in their 20s and 30s, they need to be able to afford to buy a house. But when you have an increase in supply, the price will come down.
All right. Well, we look forward to the surprise charts that you're going to bring to us next time. The man with the charts. Thank you, Steve Moore. We'll see you soon.
Thank you,
Stay
Maria.
with us.
Have a great weekend.
Back. And to you.